Welcome, everyone, to the Complete Aviation Solutions Deep Dive, number 111. Our mission here, as always, is pretty clear. We take the latest industry intelligence, unpack it all, and really pull out the most important nuggets of knowledge and insight for you. Think of it as your shortcut, to being genuinely well-informed. Today, we're jumping into three quite distinct, but I think fascinating areas of the aviation world. We'll look at some interesting route resumptions, examine the financial challenges facing a big cargo operator, and explore the, really ambitious growth strategy of a national carrier.
Yeah, and it's important to see these aren't just separate little stories. Each one gives us a really crucial window into the current dynamics of the global aviation scene. Everything from, geopolitical ripple effects to operational resilience and even future investment plans. It all connects.
Okay, let's unpack this first one then. It's a story of pretty quick comeback, actually. We're starting over in the eastern Mediterranean. Several Israeli carriers are set to return to Paphos in Cyprus. This is after they canceled flights back in January 2025, citing security concerns, unspecified ones. What's really striking here is just how fast they're coming back. So first up, we've got Arkia Israel Airlines. Their spokesperson says they'll restart daily Tel Aviv Ben Gurion to Paphos service on July 13th. Though, interestingly, their booking system, it actually shows it running 5 times weekly, so maybe starting daily, then settling. Then there's Israir, also planning to restart Tel Aviv-Paphos flights on July 13th. Initially, just twice weekly. But here's where it gets pretty interesting. Israel says they want to rapidly grow that up to 14 times weekly starting July 21st.
Wow, 14 times weekly. That's quite a ramp up. And what's fascinating here is seeing the different approaches, isn't it? Israel is clearly, going all in, shows a lot of confidence in the route, the demand, maybe the security situation too, probably targeting that strong leisure market, maybe visiting friends and relatives, that kind of traffic between Tel Aviv and Paphos. But then you compare that to Israel Airlines. They're using their subsidiary, Sundor. They plan to return July 15th, but with a really, really limited schedule, only 6 round trips total planned until the end of July. It's surprisingly cautious, wouldn't you say?
Absolutely. It really hints at maybe very different views on risk, or perhaps they're targeting totally different market segments. And then we also have Air Haifa. Their booking system shows they're resuming Haifa to Paphos on July 13th as well, with 11 flights weekly. It's worth remembering, though, Air Haifa had delayed this restart a few times already. They cited vague operational restrictions.
Yeah, and here's another layer to this, something quite curious. Foreign carriers, specifically to U.S. Airways and Bluebird Airways, they were never actually banned. They just kept flying between Tel Aviv and Paphos the whole time on a scheduled basis, right through this period of supposed security concerns. And the exact nature of those threats, like you said, never publicly disclosed. So if we try and, connect this to the bigger picture, what this Cyprus story really shows us, I think, is the resilience of demand, especially on certain routes, even when security issues are, seemingly in the air. That rapid return by some, despite undisclosed threats, while foreign competitors never stopped flying. It really highlights how airlines have to constantly weigh that perceived risk against, undeniable commercial opportunity. It's a very nuanced situation. Shows how strong market demand can sometimes push operations to restart quickly, even in sensitive regions.
That's a great point about demand resilience. But like you hinted earlier, not every aviation story right now is about a quick comeback. We're seeing some pretty serious financial headwinds, particularly hitting the cargo sector, aren't we?
We are indeed.
Which brings us to, a story of financial turbulence down in New Zealand. And here's where it gets really interesting. The New Zealand parts of Airwork Group have just entered receivership.
Absolutely. And the Airwork situation is a perfect example of that turbulence. So for listeners, receivership basically means control is handed over to a court-appointed third party, the receivers. They manage the company's assets, its finances, usually because of severe financial distress. In Airwork's case, the trigger was apparently a shareholder breach of the group's banking facilities, and this was directly tied to a looming default on a pretty big loan.
Yeah, getting into the specifics, we're talking about an $83.5 million loan, originally taken out back in 2019. It expired in July 2024, got extended to July 31st, 2025. The company itself had said, pretty starkly, that if they couldn't repay by this new deadline, it would cast, and I quote, major doubts about Airwork's ability to continue operations. And crucially, all of Airwork's assets were pledged as collateral, meaning default, and you risk losing everything. The receivers, Brendan Gibson, Daniel Stoneman, and Neil Jackson from Caliber Partners, they've said the company will keep trading for now, and they're looking for new investors, starting what they call a going into concern sale process.
Trying to sell it as a functioning business, basically, not just liquidating assets.
Right, so keep trading, look for a buyer. But it's important to know exactly which bits of Airwork Group are actually in this situation. It's not the whole group, is it?
No, exactly. That's a key distinction. The receivership covers Airwork Holdings Limited, Contract Aviation Industries Limited, AFO Aircraft, NZ Limited, Airwork Fixed Wing Limited, and their main certified air operator, Airwork Flight Operations Limited, all the NZ entities. But, and this is important, their Australian and Irish entities, including their own in-house aircraft lessor, SPV Airwork Ireland Limited, they are not affected, still trading normally. So it suggests maybe some strategic ring fencing of certain parts of the business.
Okay, so beyond the immediate loan issue, what really led them here? What were the big hits, the major blows that impacted their revenues and operations so badly?
Well, there were definitely major compounding blows. One of the biggest was losing 5 Boeing 757-200 PCFs. PCF just means passenger to cargo freighter, converted planes. These 5 were leased to a Russian airline, Aviation, but they got stuck in Russia after New Zealand brought in sanctions back in March 2022. Airwork Group is now suing insurers for compensation, but, that's a long process. The immediate hit was losing those aircraft from their fleet, losing the revenue, losing the capacity.
Losing 5 big freighters like that.
Yeah.
Yeah, that sounds crippling for a cargo operator.
Yeah.
Fleet utilization is everything, right?
Absolutely. It was a massive blow. And then, as if that wasn't enough, Airwork recently lost a main customer, Team Global Express, TFX. TFX just moved its charter contract to a rival airline in 2024. Now, this customer alone apparently accounted for about a quarter of Airwork's revenues at the time.
A quarter? Wow.
Yeah, that's a huge sudden hole in your income, forces a pretty drastic rethink.
So despite all that, they are still operating some aircraft. What's left in the fleet? Looks like 11 Boeing 737-400 special freighters and 1 737-300 SF. Though it seems only 6 of the -400s are actually flying right now. And they've been trying to sell off assets too, haven't they, to raise cash? Sounds like they're really trying to stay lean.
They are, but the question is, how long can you sustain even a lean operation when key assets are, well, effectively frozen and major customers leave? It's a really tough balancing act. And there's another layer here too, the ownership structure. It adds complexity. Airwork Holdings, the parent, is wholly owned by China's Zhejiang Rifa Precision Machinery, but Airwork Flight Operations, the actual certified airline part in NZ, that's owned by a public trust with undisclosed shareholders. This matters because New Zealand law caps foreign ownership of its certified air operators at 49%.
Wow, right.
So that 49% cap could definitely complicate any future sale or restructuring if, say, a foreign buyer wanted the whole operational side.
That's a really critical detail. And one last point on this, they have a joint venture partner, right? Freightways.
Yes, the logistics firm Freightways, they're 50-50 partners with Airwork Group in something called Parcel Air. Freightways is watching closely, understandably, and they've said they have a contingency plan ready to minimize disruption if Airwork does ultimately cease operations.
So what does this whole Airwork saga tell us about the cargo sector more broadly?
I think it really underscores how vulnerable cargo operators can be. Vulnerable to geopolitical shocks, like the sanctions hitting their leased assets in Russia, and equally vulnerable to losing just one major customer. Concentration risk, basically. It's a stark reminder that even established players can face rapid, severe financial distress from these external, often unpredictable factors. Highlights the real need for, diversification and strong risk management in this part of the industry.
Okay, so while some are clearly battling distress, it's fascinating to pivot now to a story of, well, the opposite ambitious expansion.
Yeah.
Uzbekistan Airways. They're making some really big moves with their fleet, aren't they? They're getting their first 2 Airbus A321-200neos in 2026.
They are. And it immediately raises the question, okay, how are they funding this kind of significant growth and what's the bigger strategy? These first 2 A321neos, for instance, they're coming via a lease agreement signed just recently, Juneteenth 2025, with CLC. Both jets are coming straight from CLC's own order book with Airbus, which can be, quite efficient, maybe better terms. And CLC actually has 18 of this A321neo variant on order, so it shows the scale of their own investment. And maybe Uzbekistan Airways' potential future plans, too. The configuration plan for these new planes sounds pretty standard, modern. 16 business class seats, 156 economy, so aiming for both premium and density.
And how does this fit into their wider fleet strategy? Is this just adding planes, or is it part of a bigger overhaul?
Well, it's definitely part of a much bigger refresh and expansion. Signals a clear ambition for major growth. Back in May, the Uzbek government actually agreed to buy 14 Airbus aircraft outright and lease 5 more. That's a huge commitment, 19 aircraft total. And on top of the Airbus order, the airline hinted back in February about maybe signing an MOU, a Memorandum of Understanding, with Boeing. for potentially 14 more Boeing 787-80 Dreamliners. Their long-haul workhorse, you look at their current fleet now, it's already quite diverse, around 44 aircraft. Various Airbus A320s, A321s for shorter routes, Boeing 767s, and the existing 787s for a longer haul. They even have some older IL-76 TDs for cargo and a Pilatus PC-24 business jet. So yeah, they're not just adding, they're strategically modernizing and expanding across the board.
It really sounds like they're positioning themselves for serious long-term growth, trying to be a bigger player globally. How does this massive aircraft investment connect with their wider financial strategy? It must cost a fortune.
It does. And they are clearly laying the groundwork financially, aligning with broader economic reforms in Uzbekistan. Uzbekistan Airways is actually planning to launch an initial public offering, an IPO, in 2026. This is part of a bigger government plan. They're one of 11 large state-owned enterprises set to go public. An IPO means selling shares to the public for the first time, raising potentially huge amounts of capital for these expansion plans. And to get ready for that IPO, they're actively switching from their national accounting standards to international ones, IFRS.
Ah, that makes sense.
Yeah, it's a critical step. Makes their books transparent, reliable, understandable for global investors. And they also plan to sign a specific financing deal with Deutsche Bank, apparently, to help fund these aircraft purchases.
So putting it all together, it's a really comprehensive picture. An airline investing heavily, backed by serious financial prep, diverse funding sources, all tied into a national economic strategy.
Exactly. It's a bold move. And it raises interesting questions for the industry. How will this kind of rapid state-backed expansion, particularly in emerging markets like Central Asia, affect the competitive landscape? Its success, or perhaps its challenges, will definitely offer valuable lessons for others.
Absolutely. And what a journey we've taken just now. From those nuanced rapid route resumptions back into Paphos, revealing that surprising demand resilience, then navigating the really complex financial restructuring of Airwork Group, highlighting just how vulnerable cargo operators can be. And finally, soaring into the really ambitious fleet plans and growth strategy of Uzbekistan Airways, backed by big financial moves. Each story totally different on the surface, but each one really showing just how dynamic and interconnected this whole aviation industry is.
It really does. These deep dives consistently show that, don't they? How global events, complicated financial structures, big strategic decisions by airlines, they all weave together to shape the industry. So maybe a final thought for you listening. How might the success or, the struggles of these specific companies we talked about, like the resilience of that Cyprus route or the restructuring at Airwork or Uzbekistan's big expansion, how might those specific stories create ripple effects? Ripples that influence broader trends in how airlines operate, where investment goes, even the passenger experience worldwide. It's all connected in this complex web, isn't it? What happens in one corner can definitely impact things thousands of miles away. Watching these stories unfold gives us powerful clues about where the industry might be heading.
Absolutely. A lot to think about there. Thank you for joining us on this deep dive. We hope you feel a little more well-informed and maybe ready to explore the skies yourself.